We head to the markets now, and we're doing it this week with Anete Edit. Anete resumes the week with green numbers. Anete, congratulations to you. Even though the last week ended in the red, we see a comfortable green intraday today.
Yes, and not just comfortable. The markets, take a look at the number there, 96,632.88.
Yeah, we closed at 95 on Friday. So quite a boost that we've had so far.
And quite interesting to know that it's the financial services sector, particularly the banks. The banks have always been in the news, so they're the ones revving the market. Last week, Dangote Cement was what made a very negative impact.
Yes.
Okay, so now let's talk more about this stock market, the domestic stock market. Nigeria's domestic stock market has dropped all the way from the more than 35% increase which it started the year, and to about 28.4%. But at intraday, 0.69%. That's the number for the NGX, and like we mentioned, oscillating in between 96,000, 95,000. So these numbers are still going up and down, back and forth before it gets to the final level by 2:30, the close of Monday's trading session. But so far, this is the number at intraday that we last tracked. And for the Johannesburg Stock Exchange, 0.88% in the green. And of course, it's also climbing higher all the way from the 80,000 points to 84,422.88. That's for the Johannesburg Stock Exchange. Now let's move over to the other sides of the markets on the African continent. Egyptian Stock Exchange, the EGX 30, 0.20% in the red at 30,000, barely hanging on to that 30,000 level, which you can see on your board here. And for the Kenyan Stock Exchange, we see the NSE 20, the NSE All Share Index at the Nairobi Stock Exchange Index, 0.19% in the red, but that was for Friday's closing session. And talking about Kenya, we hear that the government last week announced that it plans to bring back some of the measures. They're reintroducing the measures from a scrapped finance bill due to a deadly protest, which sparked the deadly protest sometime in June last month. And the government is planning to generate about $1.2 billion by reintroducing this tax provision to meet its fiscal obligations. So that's it in a nutshell for the markets that we track on the African continent at intraday. Now let's take more perspective about Nigeria's financial market, but this time the fixed income market, where we'll be talking more about last week. We saw the forex reserves continuing to be on the decline for a third straight week, and this is coming despite in the midst of the central bank's reintroduction of the Dutch retail Dutch auction system, which it hoped that would make the value of the Naira, as well as the value of the foreign exchange reserves, which is Nigeria's external buffer, to come back in the green. But to give us more perspective about this, let's bring in Senator Audu, Forex and Fixed Income Dealer with Access Bank, to give us more details about that. Thank you for joining us, Senator.
Thanks for having me, Anita.
Okay, so Senator, I have 3, if not 4 questions for you. Now let's start first. You're the Forex dealer. Now, what's happening to Nigeria's? We know that, yeah, the central bank has been intervening in the Forex exchange market, and then at the same time, we see the Forex level maintaining that descent all the way from what it was just when you thought the market would make some gains. So can you tell us more about this latest decline in the foreign exchange reserves?
Okay, so we saw the CBN intervene through the retail Dutch auction system recently, and at that auction, a total of $815 million was sold across banks for the demand that was submitted. So it was expected that there should be a decline in the reserves in line with that significant sale. So we have in fact seen a decline, but not too pronounced. We saw the reserves come out on Friday at $36.45 billion. Just before that auction was announced, the reserves were just below $37 billion. So we've not seen, so although we've seen a decline, it's been a managed decline. So a decline from about $36.8 billion to about $36.45 billion. Since then, we've not seen the CBN come in to intervene in the markets, but we do expect that with different initiatives that the CBN is putting out, we should see a replenishment in that figure, particularly as a result of the Eurobond that the federal government is is issuing at the moment.
Okay, so now still with financial matters, but this time I'm talking about the Naira. The Naira, yes, last week has been dropping, but as at Friday, boom, it made about 1.01% gain. That's at the official market. So can you tell us what led to this loan gain for the local currency just on Friday?
Pardon? What's the question on the local currency, please?
Okay, I said the Naira made a 1.01% gain on Friday, and this is coming after 4 days of that the local currency has been, dropping. So what led to this gain that we saw on Friday?
Okay, so we had seen a sharp depreciation in the exchange rate. That's following the gains we had seen following the announcement and the conduction of the retail auction, but we saw a bit of a moderation recently. So as you rightly said, we saw an appreciation in the NIFM rate to about 1,570 Naira per dollar, although we saw a marginal depreciation in the NFX rate to 1,598. Today, we've seen those trades in the FX market remain just below the 1,600 level mark.
Okay, so now let's talk a little bit about some foreign matters, but which has a correlation with Nigeria's market. On Friday, the U.S. Federal Reserve, that's the world's #1 bank, the #1 bank, central bank governor, that's Jerome Powell, announced that much-awaited interest rate cut, which is imminent just next month. And that is expected to have like an impact, a positive impact, because a lower dollar, would mean a value for Nigeria. So now, how is this going to impact Nigeria's economy in the long run?
Okay, so we saw that the Fed chairman, Powell, alluded to the fact that we might see rate cuts on the Fed rate. So how that will affect the local market, we do expect that, given that rates in the US should trend downwards following that announcement and eventually leading to when the cuts actually happen. We do expect that emerging markets such as Nigeria may become more attractive to foreign portfolio investors. So we may see an inflow of foreign currencies to Nigerian markets because the rates available in the Nigerian market, particularly on the Eurobonds, will be more attractive to these managers. So we do expect that, barring any other information, we should see some interest in African Eurobonds. Those bonds currently are not haven't moved significantly following that news, but we do expect that, depending on the measure of the cuts that the US Fed does apply, we might start to see some of those flows come here, and correspondingly, we should see rates decline on those Eurobonds and the prices rise.
Quite interesting. So, Senator, I think we'll leave it there, of course, and of course, take our attention to other sides of the market around the world. But thank you so much for your time and your analysis on our show.
Thank you very much.
Senator Audu, Forex and Fixed Income Dealer with Access Bank. For the market numbers, that's intraday. Now, let's talk about markets on the Middle East, where we see mixed sentiments permeating the market. Mixed first, starting with the United Arab Emirates, 0.29%. For the Abu Dhabi, 9,346.74. And for the Dubai FM, in the green, 0.29%. Also, 4,305.09. That's the index point for both of the twin on the United Arab Emirates, the indexes on the United Arab Emirates Exchange. Now, let's look at the other side of the market. Qatari Stock Exchange, as well as Saudi Arabia, both in the mixed picture there, where we see the impact of the Middle East tension, where there is a retaliation in between Hezbollah and Israel. So that is still having its effect on the market. So we see the market making a pullback for the Saudi Arabia. That's for the tidal wall, 0.21% at 12,236.78. But for the Qatari Stock Exchange, all prices are helping that market. So 1.16% is what it gained at intraday, or still gaining at 10,222.81% points at intraday. That number we'll get to see at the close of today's trading session. And let's fly over to the United States. That's the world's biggest economy, where we see little change numbers for the Dow Jones Industrial Average, S&P 500, as well as the Nasdaq index, all in the green, more than 1% for the three averages there, which gets the attention of most of the traders around the world. This is coming after that much talked about, much awaited expectation or the confirmation from the U.S. Fed chief, with Jerome Powell, and of course he had said, it made affirm that the rate cuts would definitely come, and of course the markets are really responding positively to that. Now, in terms of expectations for this week for the United States, the markets will be expecting initial jobless claims, which will be due to be released on Thursday at about 1:30 p.m. Nigerian time, and that will be followed by the July personal consumption expenditures reading for Friday. That's for the world's biggest economy, so the markets will be out on the lookout for those information coming out from the world's biggest economy. And final stop, let's go to Asia, where we see mixed picture there. But for the Nikkei, we see it still, it has dropped all the way for that 40,000 and still fighting its way, trying to maintain the 38,000 points, because anything can happen, and this number could just be just below what we see here. 0.66%, that's what is dropped. For the South Korea's Kospi, 0.14% in the red. And for the Hang Seng Index, it is risen in the final hour of this trade. It has climbed by about 1.06%. And for the mainland Chinese stock index, it's in the red, where we see there. And then, of course, for the ASX 200 Australia, we also see that number. That number is also coming a little bit in the green. So, that's it for the markets that we track for a Monday trading session. Mixed pictures across board, and the markets also looking out for what direction would the sentiments would take.
Sure, we'll follow up all through the week. Thank you so much, Anita.
Pleasure.